Welcome to our webinar today. While we're waiting for some people to log in still, like we do with every webinar, I'm still testing out this idea of putting the webcam on, but you can see me there, but once in a while we will be referring to my notes, so just be aware that I am looking away to look at my notes. Okay, that's number one. And number two is that this webinar is being recorded, so I'll be sending you the PDF as well as a recording. There's obviously quite a few new faces or new names on this webinar today. The slides that I'll be going through and the slides that you'll be receiving, you'll see that there are quite a few hidden slides. Obviously, because of time constraints, I had to cut back on some of the content. But excuse me, to explain to you more when you get the PDF, that to help you more information. Okay, so let's get into it. We just minimize this here so I can always see myself. To get started, let me ask you this question. How many of you are considered as key person or as a key person or key personnel in your company? This is something that one of the emails I came across this week. It says, PSG, for example, we've got our annual conference coming up at Sun City, and it was quite interesting to look at this email, and it says that colleagues attend the same events frequently, such as national or international conferences, but having key personnel in one place poses a business continuity risk. So obviously unforeseen events such as accidents are a potential concern. So, for example, many people like to travel together, employees in the same teams, personnel with the same similar skills, and or potential successors. But so the solution here is obviously for travel arrangements is to fly at different times, make use of different airlines, limit key members to two per vehicle, for example, allocate travel companions across divisions, businesses, and obviously units and advisor offices and things like that. But why am I bringing this up? And I think you can see my little subtitle there. We're talking about investing offshore or outside South Africa, and the focus as such is geographic diversification. So I'm using that as an example so you can relate to what we mean by diversification, by spreading the risk, if that makes sense to you. That's number one. And number two, I think it's also important that, if you don't go to a national conference, you're going to miss out on opportunities to obviously learn more new information, gain more or new knowledge and experience, but also the opportunity to network. So it's missed opportunities. And that's my gist of my presentation today. Investing offshore provides you with spreading your risk, geographic diversification, and obviously taking advantage of investment opportunities outside South Africa. So just to get going into it, here's a quote from Fujo Motorari. He was he is the chairman of Canon until 1998. He was the president of Canon in the USA. But here's a quote from him. He says, "Diversification and globalization are the keys to the future." So that's just a little quote to just put something into context. So let's bring it into it. Let's look at the current situation for a lot of people. And obviously after yesterday's debacle in Parliament, I can ask the question, how many of you are worried about political uncertainty, corruption, bringing closer to home, more worried about economic uncertainty, the economy slowing down and things like that, labor unrest. We're talking about high unemployment, there's lack of skills. Recently, there's also been in the media a lot of service delivery protests. And we've seen recently, obviously, the rand has got stronger. Yesterday, it got weaker again. So, yeah, it might be a concern for you. But bottom line, perception is reality. So if I had to bring us into a nutshell, where are we now? A lot of us are only invested here in South Africa. So you got all our eggs in what you call a proverbial basket, be it your funds, be it your shares, be it your property, whatever the case might be. And we all know that, obviously, you have to be watching that basket very, very closely. And the old cliche goes that you want to spread your risk around. You don't want to carry all your eggs in one basket. You can see there on the left-hand side, obviously, if you drop those baskets, a basket of eggs, you're going to have damage X. That's number one. Number two is if you are keeping your head in the sand, you're missing out on opportunities. So you can see in the bottom of the graph here, a lot of us don't know what's alternatives. So when I say alternatives or what's out there, if I bring in, we talk about investing offshore just now, investment allowance, but managing a share portfolio requires a comprehensive understanding of numerous things. Number one, obviously, you understand what is your financial objectives. What are your goals? Why do you want to go overseas? Why do you want to invest overseas? Yes, geographic diversification, but what are your financial objectives? So you have to understand the risks and obviously also your income requirements and things like that. But also we're talking about optimal asset allocation, which is dependent on obviously identifying and assessing the macroeconomic factors and also having a broad investment understand or broad theme, understanding of those themes. We talk about different sectors just now and opportunities that might present. But also you have to consider things like income tax and capital gains tax on potential returns in all those different offshore markets. So, investing offshore, especially on the equity side, there's always a risk. There's no such thing as a risk-free investment. So your number one goal always is protect and obviously protect your capital, but also you want to grow your capital. So risk is controlled through a disciplined and systematic risk management, call it that way, risk management approach to the markets. And you do that through obviously understanding the market, so it's through research and obviously analysis. So that's a current situation for a lot of people. A lot of people might not know what to do. So the ideal situation would be in a situation where we've got a structured portfolio, be it ideal asset allocation across all the different asset classes. But also, if I look at, excuse me, let's grab some water. Your strategy based on your risk profile, and we talk about different buckets. Your term, you need some income for the next year, next 2 years, whatever the case might be. There's different strategies that you need to incorporate. But also we're going to talk about today the situation where you're diversifying your portfolio globally. Okay, so that's the ideal situation you want to be. You want to be a global investor. You want to be local but act global. Okay, so how do we get there? What are we proposing? Excuse me. There are different investment vehicles to go offshore. So number one, we've got exchange traded products. We're talking about local exchange traded products. You can have exposure to offshore markets, number one. Secondly, obviously, you got, and we'll be talking about different funds available here in South Africa. We've got global unit trust. And then the third option, you've got an offshore trading account, and that's either through your offshore allowance account or through an asset swap. And I'm going to go into more detail what I'm proposing around that. So we talk about exchange traded funds. You want to buy rand denominated exchange traded funds. The idea there is no money is going offshore, so it won't affect your offshore allowance. Okay. So ETFs, we've spoken about it last week and we've done it before, allows you as an investor to have access to a basket rather than a single share. So you might look at spreading your risk that way, first of all. So ETFs are passively managed. And obviously the shares themselves are actively traded intraday, but the funds themselves are passively managed. Yeah, at PSG, you got two options to get involved with exchange traded funds. You can either, if you've got an equity trading account, they trade exactly like shares, and that's one way of getting involved with them. And obviously there's a whole list available on our website, and I highlighted two companies that provide exposure offshore. Alternatively is what we call the investment plan. This is where you're going to contribute monthly or lump sum investments. So the minimum requirement for a monthly debit order is 300 Rand a month, or a minimum lump sum is 1,000 Rand. So it's great for Rand, what they call Rand cost averaging, and your views long term. And there are two companies that are involved in this space that offer offshore or foreign ETP, we call them ETPs, exchange traded products. Deutsche Bank is the primary issuer. They have 8. They've got 5 ETFs and 3 ETNs. So exchange traded products, the umbrella term for ETFs and ETNs. And then BNB Paribas, they got what they call gurus. They got ETNs, exchange traded notes, and you have exposure to Asia, Europe, the US, and world. But on the next slide, you'll see in more detail. Yes, Deutsche Bank, for example, Deutsche Bank Euro, Deutsche Bank DBX Tracker, sorry, DBX Euro, DBX Japan, USA, things like that. There's the share codes, so you can look into more detail. As I said just now, you can see at the bottom here, that's page 11, but I've hidden some slides, it goes into more detail. But yeah, you can see the performance. If I had to highlight for you quickly, just some of the what's happening here. The last few months as such, here's Japan, that's pulled off. From there to that, that's an 18% drop. Might come a bit lower since we're moving below its moving averages. But also, everybody looks at what's happening recently. What about in the past? This is a USA one. From that low to that high, we're talking about 33%, nearly 34% in 77 days. So this is a kind of opportunity you've got, especially if you want to have exposure to offshore markets as a rand hedge. Okay, so as I say, highlighting DBX trackers for you. There's also the Paribas Gurus. There's 5 of them. These are ETNs. The difference mainly there is that ETFs are collective investment schemes. They're mainly based on shares, and that ETNs as such are a bit more not so much equity orientated. There's different criteria. I'm not going to go into too much detail now with the difference between the ETNs and ETFs, but you can see the performances there, very, very similar. Okay, and then we're talking about global unit trusts, and in this space you want to buy dollar-denominated unit trusts. You can either have on our platform a minimum investment is 500 rand or lump sum is 20,000, but these unit trust gives you exposure obviously to equities or listed property, variable instruments, multi-class, but we're going to concentrate on the offshore funds. In the PSG space, we've got 2 funds. We've got PSG Global Equity. You see it's a US dollar denominated. It is higher for the person with higher risk. You see it's totally 100% exposure. It doesn't pay out any the income. Okay, income distribution does not distribute. It really obviously invest, but you also can see the minimum requirement, $5,000. So less than that, it's not viable. Okay, and then we also got the PSG Global Flexible Fund. This concentrates more on a call it a multi-asset approach. So we're talking about global equity, bond, and money markets. You can see also from a moderate to a high risk profile. Again, 100% exposure, and again 5,000 rand. So this is just 2, but if you want to look at more on our website, and I've added the link for you guys, is what we call the funds A to Z. And I've added in the slides in the sense that because of time constraints, it's a 3-step process. Yeah, you'll select the categories first of all. Select the categories. So in this situation, I'm looking at all equity, all multi-asset, and geographic location. I'm selecting global, which is just 100% offshore, or worldwide. It's local and offshore. Okay, so that'll be the first step. Select different categories. Secondly, once you've got that list, you'll select which funds you want to compare against. Okay, and in the third step, obviously, you compare, do further analysis, and then choose and then buy. Okay, so this is another way to get started by choosing those funds. Then we talk about the third way of taking your money offshore, having exposure offshore, and that's by opening up an offshore investment account. So first of all, we've got what we call a offshore allowance, using offshore allowance. Excuse me. So it's a trading account offshore, having an offshore allowance. First of all, your exposure to 35. Excuse me, I've got a frog in my throat here. You have direct exposure to 35 markets offshore. And if you think in South Africa, the JSE, it's got 450 companies, 450 shares listed. The New York Stock Exchange, which is only one exchange, it's over 8,000 listed companies. So obviously the market gets much bigger when you're going offshore. But all these, when you open up an offshore account, you can elect what currencies you want to be trading in and things like that. So it's all these different markets, number one. Secondly, all these different currencies. Can you see how you diversify? So that's one way of doing it. You can choose to do it yourself, or you can have a portfolio constructed for you based on global shares as well as ETFs. Okay. If you feel that you do not have enough knowledge or do not feel confident enough to do it yourself, you can appoint a team of advisors, PSG advisors, for example. But the idea of going offshore, this is where you want to use the proceeds of your investment offshore, maybe to fund your children's education. You want to retire overseas sometime. You travel extensively. This is what you'd be looking at. So there's three options. There's two options with investing offshore. Option number one is what we call using your discretionary offshore allowance. You have 1 million rand per year. This is if you don't want to repatriate your money back to South Africa. Option one does not require a tax clearance from the Reserve Bank. So you're allowed to take 1 million rand offshore every year without having to go through the process of getting tax clearance. If you want to take more than that every year, you can invest up to 10 million in offshore shares. Okay. Again, your objective is not to repatriate your funds back very soon. In this situation, you do require a SARS tax clearance certificate, and this tax certificate is quite unique in the sense that it must include the SARS logo as well as a specified watermark. That's number one. And number two, you must also understand that this tax clearance doesn't last forever. You have to use it within 12 months from the date indicated on that certificate. And PSG Wealth, we're there to help you in that process too. Okay. Then the third option is that if you don't want to take or you've exhausted your offshore allowance and you're looking at taking more money offshore, number one, or alternatively, your investments in a trust or in a company or in a partnership, for example, investment club. As an investment club, you want to take your money offshore, then you have to use option 3, which is PSG asset swap facility. It's our asset swap facility. There's no limitations. You can take as much money as you want offshore. There are minimums, however. We're talking about £5,000 or the rand equivalent. We're talking about 21 rand to the pound, so you're talking about more than 100,000 rand. So this is not for everyone. It also applies to the offshore allowance, minimum of 100,000 plus. If you take 100,000 divided by the dollar exchange rate, you only get a few $1,000s. So you're limited with opportunities offshore. So from make it economically viable, that's why we ask for more than 100,000. From a fees point of view, obviously different fees. You can look at this 1% brokerage with a minimum of £25. We trade through SocGen. You can see this all the different criteria. Clearing and custody fee £13. Stamp duty. There's a PTM levy. This is the if I remember rightly, let me get to my notes here. It's the panel of takeovers and mergers levy. It's like very similar to the JSE's investor protection levy is a levy that you pay on every transaction. However, over £10,000 transactions. Okay. You can see all the different costs. And obviously all the different currencies, there's fees involved there too. How do we get started? How do I know what shares to buy offshore? So this is the biggest challenge for most people. As I said, the JSE 450, New York Stock Exchange, more than 8,000. On our daily newsletter, our daily investment update that we send out, some of you might have seen this before. We give a guideline. This is what we look at as PSG, our offshore equities. So this is a starting point I suggest you guys look at. These are the stocks that we're looking at as a guideline. But I find useful, I use a program called VectorVest. Many of you also use it. I know there's quite a few regulars on this. VectorVest is a great little program. It's an American program. Yes, you have to subscribe to it. It's a fundamental package as well as a technical package. I've access to the South African database as well as I've chosen the American database. But I like it, number one, is I can scan the market based on certain criteria. So this is what I did yesterday. It spits out a list of stocks for me. So I can see, okay, this is Tyson Foods. That was the price yesterday. So it'll be Monday's close. The system it says closed at $67. The system values the company at $88.80, so there's value there. So this is a starting point. So as I say, it's a big time saver. I like to scan the market. Also find it very useful. Gives you fundamental analysis, goes into more detail, but also gives you technical graphs and things like that, which you can use. It helps you make a very informed decision. If you don't want to go that route, obviously you can just take that list, our daily investment update, go to Google Finance. There's the link at the bottom here, Google Finance, and go look at the individual companies. It will still give you the fundamentals on the company and limited technicals to help you make informed decisions. So those are some of the tools I suggest that you guys can use. Here's a quote from Barry Riffelitz. If I remember rightly, let me get my notes again. Barry is a commentator on CNBC and obviously The Street and things like that. He's an author, newspaper columnist. But owning a variety of asset classes means that some part of your portfolio will be doing well when the cyclical turmoil arises. And there's been a lot of talk about turmoil coming this year. A broadly diversified portfolio includes large capitalization stocks, so it's big blue chip shares, small caps, as well as emerging. Now, obviously, I put in brackets there offshore. So you want to have offshore exposure as fixed income, real estate, and commodities. So that's just a quote regarding different asset classes as a form of diversification. So going offshore and things like that, investing offshore, what will this do? What are the benefits? The whole idea here is that it offers a hedge for people who fear political and social unrest, and I know quite a few people are worried about that. But more importantly, it offers you geographical diversification of your investment portfolio. I find more importantly, it offers you investment opportunities not available here in South Africa. And that's what I find useful with the VectorVest programs. I can look at different industries, be it biotechnology, just on the ETP side, the exchange traded fund side, or exchange traded product side. There are funds that are investing in sectors that are not available here in South Africa. Cryptocurrency, bitcoins, and that kind of stuff, and all the people doing the development around that scenario. There's ETFs involved in gaming, online gaming, so companies that are involved in developing games, and it's a big trend. So those things are not yet available here in South Africa. But also look at things like social media. You know, imagine being able to invest into Facebook or LinkedIn or Twitter and those kind of stuff. Things like Apple. You know, I'm an Apple fan. Just being able to invest in your products that you believe in. But also, obviously, the benefits of investing offshore, as I mentioned just now, is saving money for future expenses, be it your children's education. You want to send them to a foreign university, be it in the States or the UK. You travel extensively. You want to have access to your funds offshore. You might be planning to retire overseas. So all these kind of benefits would accrue to you if you've got an offshore account. So some of you might have a lot of questions. You might be saying, yeah, great idea, but, or, you know, I've anticipated some of your questions. The biggest thing here is what are the disadvantages of investing offshore? So the big thing is, yes, investing offshore can be rather daunting. You're dealing with volatile markets, number one, and also, more importantly, you're dealing with volatile currencies. There's also a lot of events unknown to you as an individual investor. So, yeah, it's for more the advanced investor. So if I don't look at the novice, intermediate, advanced investor, going directly offshore would be more for the advanced investor, someone who's got a portfolio here already and wants to diversify. But remember, as a novice investor, start with your ETPs and your unit trust, and then from there build up. Investing offshore requires a huge appetite for risk, time to watch the markets, and thirdly, obviously, expert knowledge of the markets, number one, and number two, the trading processes. I suggest is that seek the advice of the financial advisor. And this link here, by the way, will take you through to on our webpage where you can be able to find a financial advisor that specializes by investing offshore. So set up a meeting, discuss your needs with the financial advisor. And then obviously developed economies have a much lower interest rate than South Africa. So, you know, just on the income side, or just lying in cash, your investment might grow much slower. Beware of those kind of things. And then the big thing for a lot of people is it requires a significant chunk of funds to invest offshore. As I say, minimum of £5,000 or minimum of at least 100,000 rand. So those are some of the disadvantages. But I still believe the advantages far outweigh the disadvantages. And then something you might be also considering, what about the rand? Now, I just want to stress the important thing here. We are not talking about investing offshore because of the rand. I mentioned it earlier this morning that some of you might be worried about it. Investing offshore is not because you want to play the market by betting on currency fluctuations. If you want a rand hedge element, rather go buy currency futures or go buy dollars. Take your money offshore and buy dollars. That's a rand hedge. So here's a chart, inverse chart of the rand. So we're going from 6 rand here to 17 rand. And recently you can see it's strengthened. So we're still way below those moving averages. We're still long-term showing rand weakness. But this recent law, call it a rally, highlights for your opportunity where, long-term might get weaken again. Opportunity maybe to take offshore money offshore again. But I want to stress, it's not the rand. Okay, why you want to go offshore? You want to go offshore because you want to diversify your portfolio. The risk, geographically, number one, and also number two, you want to take advantages of opportunities not available in South Africa. Okay, I hope that message comes across. So as a quote from Barry again, the beauty of diversification is, it's all about it's about as close as you can get to a free lunch in investing. So it's just spreading that risk around. It's not about making money, it's avoiding capital losses. Okay, so let's see what questions you guys have got. I hope you found this informative. Cool. Okay, back on. What questions you guys have got? So it looked like there was a problem with sound earlier. Okay, here's all the questions coming in. Thanks a lot. How easy it is to open an offshore account? This is a question from Lavina. How easy it is to open an offshore account, bank account? And what may be some recommendations you have? Lavina, I don't know about opening up an offshore bank account. That I'm not so sure of. Or opening up an offshore trading account, you do it through PSG, and we trade through our partners in the UK or through SocGen, which is a big company. I don't know about the bank account. I can't really answer that one. Here's a question from Gerard. What is one would like to trade options on the New York Stock Exchange? I'm not 100% sure your question is, Gerard. What is one way? What options? You'll have to speak to a broker that deals with options. Unfortunately, we don't trade options here. Why does PSG not include trade in Indian Stock Exchange? I wouldn't have to come back to you with that question, Samaya. The 35 markets alternative. Okay. I'll have to come back to you on that question also. Why this, but there are a lot of other stock exchanges also we have not included. Quivers, maybe this is more a question for my tax advisor, but quickly explain tax implication of investing offshore. Double taxation. Yeah, remember tax. You only tax on profits if you sell. That's number one. So be aware of that kind of stuff. And also, when you do open up a offshore account, you have to declare what they call FATCA, especially with American markets and things like that. But yeah, I think it's more a question for your tax advisor, Quivers, and the taxation. Question here from Estelle. Can you withdraw money from your PSG offshore account in other countries? That's again, I would suggest you link it, your offshore accounts to a bank account, and I wouldn't know how you do it from there. I'll have to find out for you. Good questions. You guys make me think. Okay. France, regarding the link to the financial advisors, also features somewhere on the PSG online website. Yes, contact us. That's where I linked it to, and from there you can find the link to the advisors. Question here from Mike Toy. Why are certain options not recommended if one wants to potentially bring back the money to South Africa? Why are certain options not recommended if one wants to potentially bring money back to South Africa? Mike, I'm not 100% sure of your question. What options you're talking about? Sorry, I'll have to come back to you on email through that one. Alka, what percentage of one's return does one have to anticipate losing to fees? So as I say, offshore fees is about 1%. So remember, fees is just part of the game. Obviously, that's why the bigger the transaction, the cheaper it becomes. There's a question from Mandy. How do you suggest one divides one's investment between property and equity? Would you go direct investing into property? As in physical fixed property? Mandy, I'm not 100% sure. If you're looking at offshore, listed property, difficult one. Again, speak to your financial advisor. I'm not allowed to give financial advice on this platform. What do financial visas entail and at what rate? So you need to get all of the advisors and speak to them themselves. Each one is different, but you're paying for advice, and it's better to have advice and not lose money. Great questions, guys. Thanks a lot. What is the additional fee layer implication of trading via PSG platform for, say, property ETS versus directly via an offshore platform? Not 100% sure on that question either. What's the implication of a fee structure? Offshore platform, it's 1%. If you want to trade shares offshore and you want to buy property ETFs offshore, the brokerage is still the same as 1%. I hope that's what you mean by that, Philip. Jan, unfortunately, do not know what would be the underlying constituents of the portfolio, the Catalyst Global Property Fund. Best thing to do is go to the website, use that PSG funds A to Z, get down to the facts, the detailed fact sheets about the company, and that'll display more information about it for you. Okay. Pleasure, Philip. Okay. Looks like those are all the questions coming through. Awesome. Guys, just quickly, if I were to summarize it for you guys, what I want you to get from this presentation as such is people invest offshore for many different reasons, obviously financial circumstances, your dreams, your fears, the plans for the future. But, saying that achieving your goals is directly dependent on having an investment strategy that takes these personal factors into account. So your risk profile, how much fund you're taking offshore, time and things like that. So that you must take in consideration. So just remember, you have three options. As a novice, I suggest start with exchange traded products, local stuff, and then obviously move towards the global unit trust, and ultimately as a advanced investor, look at opening up an offshore trading account. Okay, so I hope you found benefits from this. Where do we take it from here? What's the next steps? If you click on this links here, it'll take you to information on our website regarding exchange traded notes or exchange traded products, unit trust, the process of opening up those accounts. All those are links for you. If you've got any additional information, you're welcome to contact our client services department, and there are their contact numbers. As I mentioned right in the beginning, the PDF as well as the recording will be sent out to you guys. I really appreciate you can give me some feedback. Complete the survey that's in the follow-up. Give me some indication where you guys want more help and things like that. Just quickly, next week we're discussing the 5 pros and cons about investing and trading. So if you look at it in being an investor or trader or both, we'll look at the pros and cons. The week after that, we're talking about is choice and flexibility critical to investment outcomes. And in 3 weeks time, just understand, just be aware that some of you guys realize that every Wednesday we have a webinar on the 27th of April. It's a public holiday. So I moved this to one day before, to the 26th of April. And yeah, we're talking about a disciplined investment approach that comes with tax benefits. Okay. So, guys, from my side, I hope you've enjoyed this webinar. You found it beneficial. I didn't go too much over time today. So, I appreciate your participation. And until next week, all the best. Keep well. There's my contact details. If you want to ask me any more questions, by email, seanvdb@psg.co.za. Until next week, enjoy your day, and keep well. All the best. Bye for now.